Well, just how have these latest trade tensions impacted on investors and their decisions? Australian fund manager Pengana has been asking their international clients exactly this question. Stephen Glass from Pengana joins me now live by Skype. Stephen, this is rather difficult times for your international investors, I would imagine, and particularly the response of Donald Trump in the last few days to China's move to go harder on Hong Kong.
Yeah, no, absolutely. Look, there's always tricky things when you invest in globally, so it's not something you just jump into. You've got to understand the dynamics. It is tricky, and it is something that we think a lot about. Clearly, Trump needs to ratchet up pressure on China at the moment because it's probably part of his next election platform after we'll call it a COVID disaster that hasn't been the best managed country in the world. So he is going to blame China, it seems, and he's going to ratchet up pressure there. I'm not saying China's done everything perfectly, but clearly there's going to be more international pressure. So in light of that, in the Pengana Fund, we're doing things to minimise risks, such as we shifted some of our investments that are Chinese ADRs. So that's Chinese companies listed in America. If we can rather invest in their Hong Kong listing, we will. So Alibaba is an example of that. No doubt that if something happens to the Alibaba listing in America, it will impact the listing in Hong Kong, but we do what we can to minimise risk. As well as that, we don't want to have too much of a bet on one thing. So too much of a bet that this is all going to either be a disaster or it's all going to be fixed. We don't like one-way bets in the Pengana Fund. And so you've got to manage the risks. But certainly this is a key concern that we are very focused on right now.
Yeah. Are you concerned about the Hong Kong Stock Exchange itself?
Well, look, it is certainly a concern, and there's no doubt there are issues there. But, you know, we see now overnight JD.com also said that they want to shift their listing to Hong Kong. So no doubt there's going to be an impact on sentiment, particularly if there's continual riots. And yeah, it will matter in the short term. But in the long term, one has to believe that if we're going to get more of these Chinese companies shifting their listings from the US to Hong Kong, that's going to make the Hong Kong exchange far more relevant. And it's actually going to make, it could actually help valuations there. One just needs to look at the valuations American companies get in their own market. So maybe we can get a similar thing in Hong Kong. So short-term pain, long-term real potential gain.
Right. Now, what about the other areas that, as a result of threats to supply chains and indeed growing tensions between the US and China, actually offers up? I mean, I'm thinking of things like rare earths.
Yeah, so we did actually look at rare earths. So that was one of the things we tried to do in our fund is we're always trying to look at it's all well and good to save money when there's a problem, but we also try to make money when there's a problem. So an example is when volatility was very low, we invest in a company called Flow Traders, which benefits from an increase in volatility. So when there's a volatility spike, we actually are making money. So one of the things that we've actually thought long and hard about is how do we make money if there is increased tension between China and America? Historically, China's used rare earths as one of the key pain points. So China is the only country in the world that processes heavy rare earths. And these rare earths are used in a lot of critical electronic goods, from smartphones to weaponry to satellites. And so what we've done, we've looked long and hard into how we can play that theme. But the problem for it, with that for us, is we are very strict on our ESG requirements. And rare earths are a very dirty form of mining. They have radioactive waste. And so it's really not the type of game we want to play. It's all very well we can make money, and we understand no one understands the capitalist need better than us, but there is an ESG requirement, and we just don't feel comfortable investing in such a polluting mineral. So we've actually decided to bypass that, but that is the type of thing that someone could look at if they want to potentially make money. An example is Australian Linus Corp. I don't know that company inside out. It was a company we just started to look at, but it is a potential play. But we've just decided it doesn't pass our ESG requirements.
Right. Well, that's very interesting, given the opportunities that there are in the US as well. So I think that's no doubt a moving space for you guys. Look, more broadly, it's really interesting. Your chief, Russell Pillimer, announced just the other day that he would pretty much commit to continuing to pay dividends on the LIC part of your fund business. Now, how is he able to do that?
First of all, it has to start with the returns that we generate. So our fund is very focused on generating nice, stable returns over the long term. We've done that. We focus a lot on protection on the downside. We focus a lot on minimising losses, and we focus a lot on minimizing volatility whilst also making money. So it all has to begin there. As well as that, we've got, by nature of the fund we took over, it does have quite a lot of tax losses, which allows us to pay fully franked dividends. So you've got to have the dividends to begin with through our returns, and then in order to fully frank them, we've got the tax position. There are things one could do one could realize gains in order to realize the capital gains to ensure that you've got the dividends to pay. So dividends come from the dividends we receive from the companies we invest in and the capital gains from our investments. As long as we're providing good, steady returns, we can provide good, steady dividends.
Yeah, another very interesting space. Stephen Glass, thank you very much for taking me through it.